What's up, guys? It's your Money Cat, and I went all in on Apple after they reported a fantastic quarter last Thursday after the market. I think Apple can go even higher from here, and I'll tell you the reasons why I'm so high on Apple. As you can see on the screen, this is what I could afford after accounting for a little bit of cushion built in, about 15% of potential loss that I am willing to hold Apple through, and minus the amount that I normally day trade with. My plan for Apple, best case scenario, is holding Apple for at least 1 year to get the long-term capital gain tax break. First, let's take a look at what Apple reported on last Thursday. I'm sure everybody knows by now, but Apple just hit a home run in terms of earnings report, so we won't spend too much time on this. But as you can see, third quarter revenue 59.7 billion versus what was expected at 52.3 billion. Earnings per share 2.58 versus 2.07 estimated. And these are some of the subdivisions of Apple. iPhone revenue coming in at 26.4 billion versus 25.9 billion a year ago, as well as services beating the estimate, wearables beating the estimate. And this one, iPhone's revenue, is what I want to pay attention to. That one is very, very important. So that's what Apple did, but it's also important to look at how they did it. So going back to the iPhone revenue, it actually increased 2%. And this is important because for the last several quarters, iPhone revenue has actually been going down. So it's really good to see Apple turning that around and making even the iPhone division, which is about half of their revenue, into a growth story again rather than just plateauing or sustaining. Furthermore, I like that this all came with only about 75% of Apple stores open. So there's about a quarter, 25% of stores still yet to be opened, which will further drive up the revenue. Not only did the iPhone sales go up, but it looks like it went up partially because of users switching from Android to iPhones more and more. This is a really good sign to see, as Android is a direct competition to Apple, so Apple's taking more of the market share. During the earnings report, Apple also announced that they'll be going through a 4-for-1 stock split. And what this basically means that for every one Apple stock you own, you're going to get 4 Apple stocks. Now, the value actually doesn't change because whatever the stock price of Apple is, that'll also get divided by 4. So for example, if Apple is at $400, you'll get 4 Apple shares, but each of them will be equal to $100. So your total value remains exactly the same. This type of stock split usually has a positive sentiment, especially among the retail investors, because the stock price, when it was at, for example, 400, it seemed too expensive, and it was too expensive to buy one share. But now you only have to have $100 to buy a share of Apple. So on August 24th, the new shares will be distributed to shareholders, and starting from August 31st, all the prices will reflect the new price. So currently it's not 380 anymore. It's at about 435 as of today. And so that'll get divided by 4, and whatever that is, it looks like right now it'll be about 109, or maybe a little bit less than 109. But that'll be the new share price. So let's go over the pros and cons of Apple in this handy dandy table that I made and I spent so much time on. There was growth in pretty much all areas, and like I said, especially the iPhone portion, that was the highlight for me, that they were able to turn it back into a growth story and growing at 2% from revenue from last year. Piggybacking off of that, 5G phones will be coming out this winter. It was supposed to come out around September, but there was news that iPhones will be delayed. So now we're possibly looking at October to November. Regardless, 5G phones, they were supposed to turn around the iPhone revenue into a growth story, but Apple already achieved that. So I think they can ride this momentum and increase the growth when the new 5G phones come out. We already touched on the 4-for-1 split. Value-wise, it doesn't change anything, but it makes the price look much more attractive, especially to the retail investors. So I think there will be a huge wave of people looking to come into Apple, especially as the pandemic continues. Not only that, but the 4-for-1 split is happening at the end of August, and hopefully around that time, the Senate and the House, they'll reach a deal and a new stimulus pay, the $1,200 will come out. And what will people do with that money? Well, the first time we saw people putting it in the stock market. And I think the same thing will happen if they get the $1,200 plus the unemployment check. Probably not as much as $600 a week, but they'll still get at least some. So then there will be a new influx of cash into the stock market, and I think the timing will work out where people are receiving that cash and Apple is now at $100 or around $100. So it'll be really, really enticing to retail investors to get into Apple if they couldn't before. I feel secure with Apple for long-term investing because regardless of whatever happens to the pandemic, I think Apple will be strong going forward. If the pandemic continues, then the Macs, iPads, wearables, things like that, those sales will continue to soar because people will be staying home more than going outside. If we get a vaccine and the pandemic, we're able to control it down, then even before the pandemic, Apple was doing really, really well. So I don't think Apple will necessarily all of a sudden drop to the face of the earth. Apple also has a very strong balance sheet with tons of cash, so I'm not worried about their position whatsoever. Finally, as a cherry on top, Apple does pay a dividend. Now, no one really gets into Apple for dividend because it's at a pitiful 0.77% annually, but it is a nice sprinkle on top. It just so happens that Apple will pay its dividend on August 13th of 2020, which is coming right up. The ex-dividend date is, I heard, both August 10th and also August 7th. August 10th is a Monday, the 7th is a Friday. I'm getting a little bit of a mixed source on this, so I will double check on this. You make sure that you double check as well. But the ex-dividend date is basically you need to own Apple's share before this date in order to get this dividend. If you buy on the date or after the date, then you will not be receiving the August 13th dividend. Now, here's a little trick. I told you that I'm hoping to hold it at least for a year. Normally, if you think, okay, 1 year, you're looking to get 4 dividends. But if I buy now, or I bought it already, and I get dividend paid on August 13th, then just by holding maybe few weeks or maybe a 1 month more, so it'll make 13 months, I'm able to get paid 5 dividends. So imagine right here is 2020. Okay. This says 2020. So I bought my Apple shares here. So I'm getting paid 1 dividend, 2 dividends, 3, 4, and when August of 2021 comes, I'll be holding it up to here. If I plan to sell, I'll hold it up to here, getting 5 dividend payments for pretty much 1 year and maybe, what is that? Like 2 weeks. So that's a little trick that you can use for dividends, where even though you're holding it for maybe a teeny bit over 1 year, but you're actually getting 5 payments of dividends. Now, coming to the con side, let's discuss what headwind Apple can possibly face. As I said, the iPhones will be delayed in September. This happens often. I'm not too worried about it as long as they're able to deliver before the holidays. The holidays are where people buy a lot of iPhones for gifts for themselves or someone else. So as long as it comes out before, Christmas time, I don't think it'll be portrayed in the stock price or have any negative impact on the sales. Next, we have the Congress trying to bring down the big four tech companies. They recently had an antitrust hearing with Amazon, Google, Apple, and Facebook. From what I heard, Apple wasn't necessarily the biggest target. I think it was Facebook and Amazon. So I think for now, Apple is in a decent position. I'm not too worried about this Facebook's been dealing with this multiple times for the last several years. It looks like they turned out just fine. Facebook's pretty much at all-time high, so I'm not too worried about this. You may feel a little hesitant to invest into a stock that is hitting at all-time high because it looks too expensive, it looks too high. But Amazon was hovering around 2,000 earlier this year. And people thought that was too expensive. People thought that was too crazy. The valuation is ridiculously high. And now Amazon is over 3,000. Lastly, this one does worry me a bit. The relationship between China and US, it is getting serious where there may be no turning back. And if it does get to that point, I think it can hurt Apple's revenue. Just remember last winter, they had that tariff war going on, and that really put a dent in Apple's stock price. So this, I'm keeping an eye on. This does make me worry a bit, but compared to this one possible headwind, I think there is just too much positivity going for Apple, and so that is why I went all in with Apple. Let's look at the technicals for Apple. Apple has been in this uptrend channel since about May, and recently around late July it did break down below the lower trend line. It looked like it was going to break down, but thanks to great earnings, it actually went back into the channel. Not only that, it actually broke above the upper trend line and is now hanging above the entire channel. So what do I think will happen from here? So now we're at a place where the RSI is really high, MACD is also high, and it looks like it's fading a little bit. So I expect a little bit of fade down here. I actually expected a tiny bit of fade on Friday, the day after earnings, and I thought it would go more like this, where it would fade tiny bit and then it would continue on with this channel, continuing to make higher highs and higher lows. But now, since we're above the trend line, I think it may fade a tiny bit, but this upper trend line may act as a support line. So it'll bounce from there and go up, making a steeper trend line, steeper channel. Worst case scenario, even if it breaks down below this upper trend line, I think Apple is good to follow this channel, which is really not a bad place to be in, because that means we're making higher highs and higher lows, and Apple is continuing to go higher. Let me know in the comment section below whether you agree or disagree with my Apple analysis, and I made a good decision or a bad decision going all in on Apple. Thank you so much for watching. Make sure to like the video, subscribe to the channel for more stock analysis and option trading strategies. Until next time, this has been your Money Cat. I will see you next time.